This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on March the 9th, 2012. Our time is 8:44 Mountain, 10:44 Eastern. The radio show runs AM 640 in Toronto, 630 CHED in Edmonton, QR 77 in Calgary. Ever miss a radio show? Catch us online. Harold's website is HESradio.com, HESradio.com. We are now podcasting, so you can be a part of our podcast. All you need to do is go to HESradio.com and have it go right into your iTunes. You can listen to it on your iPod. Anywhere you go, you can listen to our radio show now. And Harold, as we're taping the show this morning, gold and silver are making a huge comeback after being down early.
You better believe it, Randy. It was a tough week, actually, because the market sold off a bit. But the market, surprisingly, as we're taping the show on Friday, just made a gigantic move in about 10 minutes. In fact, gold went from a low of $16.75 to a high of $17.09. So we saw a $35 increase in the price of gold in less than 10 minutes. And same thing with silver. Silver was down to $33.04, and the market's trading right now at $34.32. So we basically saw a $1.30 increase in the price of silver in that same 10-minute span. And the same thing basically happened with oil. Oil was down to $105, and now as we're taping the show on Friday, we're up about $1.35 in oil, and we're trading right now at $108. As you know, we're very, very bullish on oil, gold, and silver. So those markets moving up off their support and resistance levels is very interesting what happened this week. Gold hit $1,800 a couple weeks ago. It hit its resistance level, and that's only a minor resistance. A major resistance in gold is 1,900, which was the high that we saw last year. So there was minor resistance at gold at 1,800. It did back off, and it hit actually the 1675 level. There's very heavy support in gold at 1650. The silver market hit $38 last week, which was its short-term resistance level. Again, nothing spectacular. $44 and $50 are the major numbers for silver, but there's very heavy support at $32. It did hit $33.04 this morning, but the market rallied very strong, and the fact is that silver's moved up about $1.30 so far today, a very strong day. Similar in oil, we hit a high last week of $1.10. The market hit minor resistance at 110. There's heavy support at 104, which is where the market came close to today, and now the market's up $1.30 and trading all the way back up to close to 108. We're extremely bullish on oil also. The U.S. dollar, the strange thing about today's rally is the fact that gold, silver, and oil are all substantially higher, but so is the U.S. dollar. In fact, the euro is dropping, and the U.S. dollar is up 3/4 of a penny, trading at 79.92. So as far as the U.S. dollar goes, it's at 79.92. There is 82 cents resistance, so another 2 cents in the U.S. dollar would put it up at the resistance level, and there's very heavy support at 78 cents. If we break 78 cents on the U.S. dollar, the market will drop to 76.50, which will push gold to its next level and to silver. So again, that's technically what's happening in the market. Fundamentally is the major reason why you want to be in the gold and silver market and oil. The fact is that there are so many situations that could push the price of gold and silver and oil substantially higher that those are avenues and investments that you need to be in at this particular time. But we're not saying to speculate and trade these markets. We're saying to buy and hold them. The fact is that over the next 5 years, we anticipate that the price of gold and silver will literally skyrocket. We do believe that in this particular year, we will see gold break 2,000. It could break 2,200 with a potential high of 2,500. But a lot would have to happen in order for that to happen. One of the major things that would move gold to those levels would be higher oil prices and a war in the Middle East, which I think is inevitable. I don't see any way that Iran is all of a sudden going to back down and say that they're going to close down their nuclear plants and be good. I just don't see that happening. So I do see a war breaking out in the Middle East sometime this year, and a couple things could happen. Either oil overnight could go to 2 to 250. However, if the situation is as severe as I believe it could get, with Iran really cutting off the Strait of Hormuz, which is where oil passes through to get into the Persian Gulf, it is not out of the question to see oil trading above $300 to $400. That's how severe this situation is. In fact, on the left-hand side of your page, you can put the U.S. elections, and on the right-hand side of the page, you've got the Middle East, you've got Europe, you've got the U.S. economy, and China. The only thing, in my opinion, that's stopping the stock market from plummeting this year is the fact that there's an election coming up, a presidential election. You know, the fact is that President Obama, by many accounts, has done a horrendous job. The U.S. is in the largest debt situation that anybody could ever imagine. They owe over $16 trillion that cannot pay back. However, the chances are, in my opinion, 70 to 75% that President Obama will get reelected. He's certainly got the money in which to do so. You know, they make the job numbers look a lot better. The stock market's up to 13,000. Everybody thinks that everything is rosy, but it's not. When you owe $16 trillion and your economy is in the doghouse, there's just no way in the world that these markets are going to stay up. A lot of the top analysts believe that 2013 is going to be a dire year for the stock markets around the world, mostly in the United States. Again, what's supporting the markets at this point is the fact that there's a U.S. election coming up in November. But when you take into consideration the right side of the page, the Middle East is a situation that we have to pay, you know, very strict attention to. The fact is that oil is extremely inflationary, and $100 to $110 oil that we're at right now is ridiculously high, but we're very bullish on oil, and I do believe even without a war in the Middle East, we'll see oil prices go to 150. Now, you will see volatility in that market, so those that are trading oil, don't be trading it in the futures markets unless you know what you're doing, because 90% of the people that trade the futures market lose all of their money. You don't want to be in a situation where you're leveraging and speculating when there's a potential war in the Middle East. What you want to do is you want to buy, and I've mentioned this several times, an ETF called USO, which is U.S. oil, and it moves very closely with the price of oil, and it's not leveraged, and that's the stock or the exchange-traded fund that I would recommend. You can put that in your retirement savings plan, and you can put it in your private portfolio, but there's no doubt in my mind that oil will go substantially higher this year, possibly up to $200 or higher. So again, I would recommend USO, which is U.S. oil, and that's an ETF, an exchange-traded fund that should move very closely with the price of oil and is not leveraged, which again, you don't want to be leveraged in these markets. Any pullback can hurt you substantially. Same thing with gold and silver. I like the gold and silver market tremendously. It's your hedge against inflation. And with oil above $100, there is no doubt that we have heavy inflation. For all those that shop and that go to the grocery stores, first of all, you know that the cost of food is higher. Number two, the cost of oil is substantially higher. All you have to do is go to the gas station, fill up your gas tank, and see how much more it was 6 months ago than where it is right now. And the fact is that oil goes over $200, the oil prices will be astronomical. Inflation is one of the major issues that we really need to be concerned about, and you need to have insurance against inflation. If your income is remaining the same, and you do not have investments that will increase in value when inflation goes up, then your quality of lifestyle, your quality of life has got to drop. Because if you only have X amount of dollars to pay the mortgage, to pay the car payments, to put food on the table, pay insurance, put food on the kids' back, clothes on the kids' back, and everything like that, you know, when oil prices go higher and food prices go higher, which is something that we use every day, there's just no doubt that that's heavy inflation, and you have to have investments that will go up to fight inflation. So if you go own gold or silver and oil and diamonds and those type of investments, those are the investments that go up with inflation. And if you own stocks and mutual funds, those do not do well during times of high inflation. The only reason that the stock markets are staying up at this particular point is because there's a U.S. election coming up in November. Aside from that, there's only a few companies that are doing well, which are IBM and Apple, and aside from that, the market is suspect. There's just no way in the world that I would have the majority of my money sitting in the stock and mutual fund markets at this point. I'd much rather be in cash than be in those type of markets and not make any money. There's no way that you can make money on cash at this point. You know, the interest rates are just way too low. But the reason for owning cash is, number one, you're not going to lose any money. You're not putting it in the market where it's at risk. And number two, cash is extremely important because it gives you the opportunity to pick up undervalued items, undervalued investments, things like that. And when people get into trouble financially, they look to sell off whatever assets they have, and if you do have the cash, you can certainly take advantage of that. But there is absolutely no doubt that the situation in the Middle East is extreme. I give it a 75 to 80% chance of happening before the end of the year, probably before the first half of the year. And if Israel does attack Iran, watch for all hell to break loose. Watch for oil prices to skyrocket, and watch other situations like currency markets going crazy. Then you've got the European situation, which is back in the news again this week, which is why the market's been so volatile. The fact is that the euro's falling again because Greece is in a terrible situation. But it's not only Greece. It's Spain, Italy, Portugal, France, and those type of countries are all on the verge of financial destruction. And so is the United States. The United States owes $16 trillion that there's just no chance in the world that they can pay back, and don't think that China's doing that well either. So the fact is that there's massive problems out there, and what does the small investor do? We're not Warren Buffetts here. We're not billionaires. We're just hard-working Canadians that may have had a little bit of success and want to protect our money and want to do the right thing. In my opinion, what we need to do is we need to be in the hard asset market. We've been in it for the last 10 years, and look how well it's done. Gold has gone from $250 when we first recommended it all the way up to $1,900. We're at 17 and change now. Silver went from $3.80 when we first recommended it and hit a high of 50. Oil was at 18, it hit a high of 150, and those are the markets that we've recommended thus far. Also diamonds, rare colored diamonds have done tremendously well over the last 10 years and will continue to do so. So those are the avenues that we recommend. We do not recommend being in the paper asset markets because they're too easily manipulated. So the fact is you want to own gold, silver physically, you want to own some diamonds put away for safety, and you definitely want to be in the oil market at this time. Those are my major recommendations right now.
The telephone number to invest in precious metals, 1-866-623-2002. Since 2001, gold and silver have resumed their role as a store of wealth, protecting you against the decaying purchasing power of paper money. Stop the destruction of your paper wealth by investing in hard assets, gold, silver, and diamonds. Turn paper assets into hard assets for real wealth. And you can speak with Worldwide Precious Metals about investing in hard assets, gold, silver, platinum, palladium. They are the only company Harold recommends you use, the one and only. They've been in business over 10 years. Give them a chance to earn your business. Speak with them at 1-866-623-2002. The website is wwpmc.com. Also, speak with them. Ask about receiving our free weekly newsletter. We send it out free of charge weekly via email. But remember, they've been in business 10 years. The entire time this bull run in precious metals has been on, there have been a lot of companies come and go. They have been there, and they're there to help and advise you. They're the only company that Harold recommends that you use. Worldwide Precious Metals, wwpmc.com, telephone number 1-866-623-2002. Some of the top stories that we have in our newsletter. Let me give you an idea. If you don't get our newsletter, let me give you an idea of what we have in there. We have our charts of the week, quotes and quick hits. Here's the rundown. Diamonds, gold, silver, platinum, palladium, quantitative easing in the Fed, sovereign debt, U.S. debt and deficit, oil and gasoline, jobs, stock market, interest rates, China, vehicles, real estate, and geopolitical. You can get it all. You can go through it in about 10, 15 minutes. You can spend hours if you want. Speak with Worldwide Precious Metals about receiving our newsletter, 1-866-623-2002. In the newsletter this week, one of the big stories that came out, the Fed is weighing new forms of bond buying. And that was a story from the Wall Street Journal, and a lot of people are keeping an eye on that. Also, it was interesting, Scott Wren, he's the senior equity strategist at Wells Fargo Advisors. He actually came out and said something that I agree with, that the EU debt issue is going to rile markets for many, many more years. Wall Street right now may be breathing a sigh of relief with the success of the Greek bond swap, but the truth is, the European debt issue will continue to rile the markets for many, many years to come. Even if we Band-Aid this Greek situation right now, they're going to default down the road or write down 100% of the debt, said Wren. Wren projects that Greece will likely require further bailouts, and other European nations such as Portugal and Spain may even jump on the bandwagon. In addition, he says he would not be surprised to see the market take a breather in the near term following the recent rally and expected slowdown in the global economy later this year. But that's one of the things that we need to keep an eye out. And when Harold's talking about insurance, an insurance policy in your portfolio, it's against geopolitical. Iran being attacked because of their nuclear program. It's because of quantitative easing. It's because of the debt market, the sovereign debt crisis. As well, it's inflation. And Jim Rogers came out this week. The government is lying about inflation, and it's crushing the consumer. Everyone is paying higher prices for oil, and that obviously impacts consumption everywhere. And it's not just oil, it's food. Everything is going up. There's inflation everywhere. The United States lies about it. He says, the U.S. government lies about inflation, but there's inflation everywhere. I don't know if you go shopping, but if you do, prices are up. The government says they're not. I don't know where they shop. Everybody else says prices are up. That according to Jim Rogers. And Harold, we know that. We live in the real world. I go out and get my own groceries. I fill up my own car. And all you need to do is live in the real world, and you know that there is inflation out there, and that the numbers that they come up with, along with their job report numbers, are completely bogus.
You better believe it. I believe that to be 100% true, and that's why I'm saying, that with the U.S. election coming up this year in November, that's why these numbers are coming out. There's just absolutely no way in the world that the U.S. economy has improved all that much. They put in, the Federal Reserve's put in over almost $3 trillion that we know of, probably much, much, much more than that. And the fact is that one of the reasons why the markets fell off over the last couple of weeks is because they announced that they're not going to do quantitative easing 3 at this particular point, which meant that they were going to put another $1 trillion back into the market to try to get the economy going. Again, I think that what the game plan is that just by continuing to use the numbers that they're using, which are distorted, there's no doubt about it, makes the economy look better. Then you see the stock market going up to 13,000, and people are saying, oh my God, maybe he's doing a good job, and, he's got $1 billion in his war chest to get reelected, and then you've got the Republicans that are, all over the place type of thing. So my gut's telling me that President Obama will get reelected. I'd say there's about a 75 to 80% chance of that. And a lot of people feel that will be the destruction of the financial situation in the United States. So, again, we're going to have to see what happens, but my gut feeling tells me that he's going to get reelected, and there's a lot of people very concerned about that.
It'll be interesting to see where gas prices are when people go to vote. If gas prices are high, if there is a strike on Iran, it will be interesting to see exactly how things shake down. To invest in precious metals, the one company, the only company that Harold recommends you use, Worldwide Precious Metals, speak with them. They're the experts in this specialized field. The telephone number to connect with them, 1-866-623-2002. They are a Canadian company. When you make an investment in precious metals, you can buy and sell with a phone call. Their website, wwpmc.com, wwpmc.com. Story in the newsletter from Bill Fleckenstein. And this is a quote from it. You can read it. We have a Federal Reserve that's totally out of control and thinks nothing of turning the currency into confetti. And that's why we say you need to be involved in the hard asset market. If quantitative easing 3 does come, which a lot of people believe it will, that's when you're going to see, as we did with QE2, hard assets really take off again. Martin Mierenbield, he is with Dundee Wealth, Dundee Securities, and he actually outlined some of the reasons why he's very, very bullish on precious metals. And if you look at it, it all makes sense. Monetary reflation, as the U.S. Federal Reserve and European central banks print money, that continues. A fundamentally weak U.S. dollar, that continues. Countries seeking to diversify their currency reserves. That continues. Central banks are buying precious metals, not selling. Only a slight increase in mine supply. There's strong investment demand, and the commodity price cycle remains bullish. Gold is not in a bubble and has room to rise, according to Martin Murenbield. Inflation in the emerging markets is another reason, and potential geopolitical conflicts send people back to gold as a safe haven. You can read that article in our newsletter. Jeff Nichols, he put something together as well, and he's an analyst, a money manager, an expert in precious metals, and he listed 6 different reasons to be involved in precious metals, similar to Martin Murenbield. Further monetary easing, central bank interest, long-term demand from investors, also persistent Middle East tensions, Europe's continuing sovereign debt crisis, and as number 6 is very important, we talk about it, the loss of purchasing power and devaluation of currencies. Very similar to what Martin Murenbield is saying as well. Jeff Nichols, this is his projection when it comes to gold. He believes that we could hit 3,000, 4,000, and even possibly 5,000 an ounce in the years to come, depending on what happens. Harold, we have about 2 minutes left in this first segment of our show, but the fundamentals behind this market are the fundamentals, as you can hear from those 2 stories, and people can call us and get the newsletter, 1-866-623-2002, and read them themselves. But the fundamentals are in place, and sure, we may have one day where it goes down $50 or $100, but you've got to use these as buying opportunities because this is a long-term trend in the hard asset market.
You bet it is. And again, if you believe that we are in an inflationary economy and inflation is going to get worse with weak currencies and higher oil prices and food prices, then there's only a few assets that will help you in that way, and that's gold, silver, and diamonds and oil. So that's what we're recommending. We're sticking with it. Gold's up substantially, so is silver today. We're very excited about what's happening in the gold and silver market.
The telephone number to invest in precious metals, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com, wwpmc.com. It was interesting, Rick Rule, he's with Sprott Asset Management. He was interviewed on the Canadian Business Channel from PDAC, and that was in Toronto during the week, the Prospectors, Developers of Canada. And one of the things he said on the Canadian Business Channel, he also said it in an article that King World News put together, is that if you are a believer in hard assets, when they go down, this is a buying opportunity. If you want to go long gold and silver, if you like real currencies as opposed to fiat currencies, you have to like days when you can buy it cheaply. I've been around this type of action 35 years, and I suspect before I shed my mortal coil, I will purchase much more physical gold and silver bullion. And what he's saying is, you know, there was a blue light special when precious metals went down about a week ago, and he took advantage of it. You need to look at that as well. Speak with Worldwide Precious Metals, 1-866-623-2002, the website, wwpmc.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on March the 9th, 2012. Our time, 9:09 Mountain, 11:09 Eastern. Radio show runs AM 640 in Toronto. Also, QR 77 in Calgary. They joined us last week. Welcome, Calgary. And 630 CHED in Edmonton. Harold recommends one company when it comes to investing in precious metals. That is Worldwide Precious Metals, a Canadian company in business for over 10 years. Their website, wwpmc.com. Telephone number, 1-866-623-2002. 1-866-623-2002. If you ever miss a radio show, they are archived on Harold's website, hesradio.com. You can listen as well on Harold's website, rarecoloreddiamonds.com. Should mention that you have the capability now to podcast our show. And I subscribe to podcasts. I have iTunes, obviously, on my iMac. It's simple to sign up. When the show is brand new, you hit refresh and it immediately comes into your podcast, and you just put it on your iPod, whatever device you want, and away you go. So we've given you another way to listen to our radio show. You can take a look at that at HESradio.com, HESradio.com. Harold's website for diamonds, rarecoloreddiamonds.com. The featured diamond of the week, you'll find it on our website. This week's diamond is a 1.59 carat oval cut fancy light yellow internally flawless diamond. This diamond, as is the case with all diamonds on Harold's website, has its own video. You will see the video on the website. Speak with Harold about investing in this diamond. An interesting quote from Henry Bardougian, who is the CEO of Graphs. He said, "We are being approached by money managers of very wealthy clients, or the wealthy clients themselves, who are all considering investing a small percentage of their portfolio in diamonds. This is something we have never seen in the past. These people never considered diamonds as an investment. They considered them as something very beautiful and nice to own. It made their wife happy and it's gorgeous to look at, but they always neglected the financial aspect of the transaction. And now what they're seeing is that obviously diamonds can go up in value, and they realize that it's an opportunity that they cannot miss out on." Harold, as I mentioned when we reintroduced ourselves to Calgary, you wrote an article back in August of 2005 on naturally fancy colored diamonds. You were the first person to do it, first person to tell us that we should be investing in diamonds. Big companies like Graphs, De Beers, all these major corporations have come around to your way of thinking. Your website is the top website on the internet, rarecoloreddiamonds.com, and recently added hsfineauctions.com. It's an exciting time to be involved in hard assets, and that includes diamonds.
You better believe it, Randy. In fact, I think it's one of the best recommendations we've ever made, along with gold and silver and oil, to be in the diamond market at this particular point. Again, it's so dangerous out there. You've got people like George Soros, some of the most prolific investors in the world, that are saying that we could see financial destruction, that we could see currencies that are here now that will not be here a year and 2 years from now. The fears in the markets with countries going bankrupt and a potential war in the Middle East with the potential of $200 to $400 oil, and all these situations happening are very, very detrimental to your financial situation. And if you don't know what to do, you're going to be like 90% of the people out there and lose most of the money that you've saved and put away for your future. I would strongly recommend that you look at the rare color diamond market, because it's a very important asset. It's a very smart asset to own. And here's the reasons why. First of all, as an investment, they've never, ever gone down in value. Yellow flawless diamonds, like we're going to talk about at this point, have never, ever declined in value. They're almost impossible to get. And the fact is they have a track record. They go up by 25% a year. They have ever since I've been in business since 1980. And the fact is that they've never, ever dropped in price. So just on a conservative basis, without all the situations that are present in the economy right now, the Middle East and Europe and the U.S. and China and all those situations, the fact is that it does better than putting your money into your retirement savings plan. Now, the fact is that these diamonds never go down in value. They double every 4 years. They go up by 25% a year. But the exciting thing is, during times of extremely high inflation like 1979 and 80, these were the assets that went up 500% in 2 years. We literally saw these diamonds go up every single quarter. So the thing is that you want to own a yellow flawless diamond. Now, when I say yellow flawless, the fancy yellows, the fancy intense, and the fancy vivids are the diamonds to own. Now, consequently, this week we featured a fancy light yellow diamond. In actual fact, very seldom will we sell fancy light yellows unless it's of extremely high quality. And the ones that I'm showing on our website this week, including the featured diamond, are spectacular. They're called canary diamonds. They're very beautiful forms of yellow, and these are all internally flawless diamonds, so they're extremely valuable. But the thing is that, and I've mentioned this the last couple shows, is that last year I bought the entire production of all yellow diamonds. Now, very, very few of them will ever turn out to be internally flawless. So the majority, over 95% of the diamonds that we bought, we had to sell off to other dealers around the world because they were not of the quality that we need for investment purposes. So basically, all of the diamonds that are on my website are investment quality diamonds. The featured diamond this week, just so you know, is a fancy light yellow. It's a 159 oval. The diamond is so beautiful that it looks like it's a 2-carat diamond because ovals look larger than any other diamonds because they're rounded. The color of the diamond is spectacular. It's known as a canary diamond, and it's internally flawless. And the other reason that I'm excited about featuring these diamonds, and you'll see a few of them on the website this week, if you go to rarecoloreddiamonds.com, go to the loose diamond section and look under yellows, you'll see under the fancy yellow section a few of these fancy lights. And if you look at the featured diamond, it's a fancy light yellow 159 oval internally flawless diamond. Other thing I'm excited about them, these diamonds are under $16,000. It's almost impossible to buy a yellow flawless diamond today for that price because the prices are going up and up, and in September we're going to see another 25% increase in the price of yellow flawless diamonds. So while you can still get them, I invested about $7 million over the last year just buying all the roughs. Now, again, out of all the rough diamonds that we bought, once we cut and polished them, sent them to New York to the Gemological Institute of America to be graded, we found that only about 100 of all the diamonds that we bought were of the quality that we would offer to our clients. So basically, the entire year's production of internally flawless yellow diamonds is sitting at around 100 to 110 diamonds, and that's it. Most of them will be on our website over the next week to 2 weeks. Several are up right now. And again, we make these diamonds available to our Canadian clients first. Now, it's one thing to own a diamond. The reason that you want to own these diamonds, first of all, for profit. They go up by 25% a year. They double every 4 years. And in times of high inflation, they've gone up 500%, meaning a $20,000 diamond today in the next 5 years could easily be worth $100,000. It happened in 1979 and 80. I believe it's going to happen again. So I put up a lot of money because, number one, this is my major business. I do sell diamonds worldwide, but 80% of the diamonds that we do sell go to our Canadian clients, and most of them have them put away in either safety deposit boxes or put them into beautiful rings and jewelry and put them on their wife's fingers. These are magnificent, magnificent diamonds that you'd be proud to show off and wear, but as an investment, there's nothing better because they never go down in value and they double every 4 years in value. And again, during times of high inflation, they've gone up 500% in 2 years. Look at the featured diamond. It's a magnificent diamond. It looks like it's almost 2 carats. And again, it's a diamond that you definitely would like to own, and it's priced, to sell. The other thing is that most people do realize that diamonds have been great investments over the years. Even white diamonds have been. If you've been married for 20 years and you bought your wife a diamond ring and you took that in to be appraised at this point, you will find that that diamond has gone up in value. The one thing about diamonds is, how do you resell them? And I've realized that over the years, and because we have such a large following, we've always been able to resell clients' diamonds on our website and privately. However, it was always my goal to recreate or to create a secondary market to resell not only yellow flawless diamonds and investment diamonds, but to sell very high-end collectibles. And we now have built, and it's taken us 2 years to build it, HS for Harold Siegel, hsfineauctions.com. Visit that site. We have auctions. We're trying to have them every twice a month. And we sell very, very high-end gold and silver and platinum coin pieces. The ones that sold last auction were absolutely phenomenal, including a Tiffany piece, including a kilo Libertad, including a kilo silver coin, which weighs 32 ounces, and is just absolutely beautiful. It had a diamond in its eye. So we got magnificent pieces. We sold 6 pink diamonds and a green diamond ring. So HS Fine Auctions is doing extremely well. Most of our clients are not selling their diamonds at this time because it's the next 5 years that we anticipate making a fortune in the diamond market. And as currencies fall, as inflation goes up, as things get tougher and tougher around the world, you want to own a diamond not only for profit, but for safety and for privacy. Because a rare colored diamond is the only form of portable private wealth left in the world. You could literally put a $20 million diamond in your pocket and nobody would even know it. But try to put $10,000 in your pocket and cross a border and see what happens to you. They'll confiscate your money and they will put you in jail. But how many times my wife has crossed a border wearing an 8 or 10 carat diamond ring? She wears a 14 carat flawless yellow now and has never ever been stopped. So diamonds have always been that type of asset, portable private wealth. Why am I bringing that up? Because again, the world currency markets are in turmoil. We've got currency wars going on. We've got countries that are on the verge of bankruptcy, including the United States and several countries in Europe. And you need an asset like this just in case you need to leave the country, start all over again, or sell an asset in another currency. And we do all that for you. We ship the diamond directly to you. We pay the shipping, the insurance, and the duty coming into Canada. We send you the GIO reports and the diamonds beautifully packaged in their own beautiful display boxes. We send you our newsletters each week. We send you auction results from around the world. And when the time comes to sell the diamond, we are the only company that can resell your diamond for you. No other dealer has what we have, which is HS Fine Auctions. So again, you definitely want to look at the yellow flawless diamonds and look at the featured diamond this week. It's absolutely magnificent. If you've heard of Canary diamonds, that's what that is. It's a 159 oval, fancy light yellow, internally flawless, and the diamond sells for under $16,000. It's a magnificent diamond that could easily be worth $75,000 to $100,000 in the next 5 years. The other diamonds that we recommend very heavily are Argyle pink diamonds. Argyle pink diamonds are the most sought-after diamonds in the world today because the mine that produces them, the Argyle mine in Western Australia, is going to close its doors by 2018. It's been in production since 1985. They produce 30 million carats of diamonds a year, most of those being low-grade white industrial diamonds. But out of all the diamonds that come out of the Argyle mine, about 200 carats of the most beautiful pink diamonds come out in a year. That's enough to cover the palm of your hand. That's how small that diamond market is. When the Argyle mine closes before 2018, which is only 6 years from now, these diamonds will increase, in my opinion, by 8 to 10 times what you're paying for them today. Meaning that if you bought a diamond for $50,000, that's a diamond that could be worth $400,000 to $500,000 within the next 8 to 10 years. We've saw it happen in blue diamonds, and now we've got a second opportunity to take advantage of the pink diamond market because the same thing happened with blues. And blues went in 2005 from $200,000 a carat to $1.4 million in 2008, and that was during the time when the financial markets were crumbling because Lehman Brothers went out of business. So again, we're in a time where you need to shift some of your assets to the hard asset market. Gold and silver and rare colored diamonds are the best investments you can make. Gold and silver trade on exchanges, so they go up and down based on investors' feelings as to what the markets are doing at that particular point. But diamonds do not trade on an exchange. They trade privately. And we are the only company that not only owns rarecoloreddiamonds.com, the top rare colored diamond website in the world. All of our diamonds are videoed also. Means you can see every aspect of the diamond. We also publish right on the website the GIO reports. So the fact is that you can look at the diamond and then click on and view the GIO report. Every one of our diamonds are certified by the Gemological Institute of America, and that's how you can tell that they're authentic. In fact, you can go on GIA's website, punch in the number of the diamond that you're considering, and it will tell you everything about the diamond and that GIA actually graded that diamond. So again, it's an amazing time to be in the rare colored diamond market. They go up by 25% a year, except during times of high inflation, where we could see the 400% to 500% increase in the price of these diamonds, and we're extremely excited about offering these diamonds to you. Now, all the diamonds that we cut and polished from last year's production are now all coming onto the market. So the fact is that there are a couple dealers that copy what we do in Toronto, but they do not have the diamonds that we have. In fact, GIA, Gemological Institute of America, grades diamonds based on their color. So you could get a fancy yellow or a fancy intense or a fancy vivid diamond, but GIA also has a scale from 1 to 10 that they grade these diamonds on. And if they fall within that scale, they're still considered a fancy intense or a fancy vivid or fancy yellow. However, we're very strict with our diamonds, and if they're not 8s, 9s, and 10s out of 10, we sell those off, and that's primarily, if you see any of our competitors that have yellow flawless diamonds, those are in most cases the diamonds that we rejected. Now, the fact is that these are diamonds of the highest caliber. The colors will take your breath away. We can put them into the most beautiful rings and settings for you if you want to wear them. If not, we ship them directly to you, and they go in your safety deposit box for safety. But when the time does come to sell them, we would be very excited to sell those diamonds for you on our auction website, which is hsfineauctions.com. You know, back 6-7 years ago, we had clients that had purchased through us some amazing coins, beautiful silver and gold and platinum coin sets that we felt would go up in value, and that's exactly what happened. We have clients that 6 years ago bought Libertads, Mexican beautiful silver coins that weigh a kilo, which is 32.15 ounces. Now, we had a client that back 6 years ago bought one of these Libertads for $1,500, put it up on the website. We sold it for them on HS Fine Auctions, and it sold for over $4,000. So again, this is what we do for our clients. We're the only company that can not only deliver these amazing diamonds directly to you, and we make it very, very simple, but on top of that, we are also the only company that can resell them for you, which is obviously extremely important. So please visit rarecoloreddiamonds.com. Take a look at our beautiful yellow and pink diamonds. They'll take your breath away. They're the best investment you could make, along with gold and silver and oil, and that's how we're going to get through the next 5 years. The other thing that I do believe is going to happen is that we will see interest rates increase. As inflation really starts to loom and get heavy like it did in 1980, those of us that are in our 50s and 60s and 70s, we remember the time back in 1980 when the Federal Reserve raised interest rates all the way up to 22%. And gold hit its high of $850 at that time. So there will be a time that they are going to raise interest rates substantially. Gold and silver and diamonds will still skyrocket in price, but then it would be a good time to liquidate part of our assets and to be able to take heavy profits and put it in the bank at 20%. I do believe that those days are coming again. And again, if you're not prepared for them, you're not going to make the money to take advantage of that. If you're sitting in stocks and mutual funds, my guess is next year you're going to lose a major part of your money. Don't let that happen to you. We work way too hard as Canadians to put money away, you know, and to save it. And that's what we are. We're savers. And we're in the most difficult financial times that most of us have ever seen. I've been doing this radio show for over 10 years, and I've been on the radio for over 25 years. I know my business. I've been through the inflationary times of the 70s and 80s, and again, I was one of the only people to predict at $250 gold that it was going to go to $1,500 to $1,800, and we have seen those numbers. So again, we want your business. We want to help our Canadian clients protect themselves and get to where they need to go financially, and that's with the gold and silver and diamond market. Go to rarecoloreddiamonds.com this weekend. Look at our beautiful yellow flawless diamonds. Look at our pink flawless diamonds. Look at our historical price tracking system, and that will tell you where diamonds were back in 1980, where they are today, and what they're going to be 10 years from now. Again, we want your business, and we want to help our clients protect themselves and make money during the most difficult financial times we've ever seen.
There is a telephone number where you can connect with Harold as well. It's 1-800-432-1022. 1-800-432-1022. And Harold has always been very generous with his time. He's willing to speak with anyone about their personal financial situation, maybe give a little advice. If you'd like to take him up on that opportunity, you can speak with him at 1-800-432-1022, rarecoloreddiamonds.com, hsfineauctions.com. Check back there periodically for the next auction. We will announce it on our radio show, so tune into the radio show. We will have that information for you. hsfineauctions.com, rarecoloreddiamonds.com, 1-800-432-1022. To invest in precious metals. And as Bill Fleckenstein was saying, we have a Federal Reserve in the United States that's totally out of control and thinks nothing of turning the currency into confetti. And since 2001, gold and silver have resumed their role as a store of wealth, protecting us from decaying purchasing power. Start your own precious metals investment account today. The company Harold recommends you use, a Canadian company out of Vancouver, in business for 10 years. They're the experts in this very specialized field. They don't do anything else except precious metals. Worldwide Precious Metals, wwpmc.com, telephone number 1-866-623-2002. We have about 5 minutes left in our show here, and one of the items that has always been a pet peeve for me, I personally believe the United States is a debt time bomb about to go off. People talk about Greece and Portugal and Spain and Ireland, but the country that we should really be worried about is the United States. In fact, story out, you'll see it in our newsletter, the U.S. government set a record deficit in February. The federal government in the United States recorded its worst monthly deficit in history, according to a preliminary report from the Congressional Budget Office. It's hard to believe, but the deficit in the fiscal year 2012 is already more than $500 billion. It's amazing. The CBO's figures show that despite repeated efforts to trim spending, the government has borrowed 42 cents of every dollar it spent during the first 5 months of this fiscal year. The nonpartisan agency projected the government will run a deficit of $229 billion in February, the highest monthly figure ever. The previous high was $223 billion 1 year ago. It's the 41st straight month that the U.S. government has run a deficit, itself a record that dates back to the final months of U.S. President George Bush's tenure. Before now, the longest streak on record was 11 months for all of the fiscal year 2012, which began October 1st. The budget analysts said the government has raised $869 billion in revenue but spent $1.5 trillion. The United States heavily in debt, and it gets better. Washington, they are going to be spending $5 trillion in interest payments. This is a CNN story. Read it in the newsletter. Interest rates on U.S. bonds may be ridiculously low, but that doesn't mean the country's future interest payments on national debt will be. Uncle Sam will shell out more than $5 trillion in interest payments over the next decade, according to the latest projections from the CBO. And you can read that story in our newsletter. You also have a pension crisis looming, student loans. There's delinquency there. You have a country that's bankrupt. You have states that are in trouble, like Illinois. You have cities like Jefferson County in Alabama. Detroit is in trouble. There are cities like Stockton in California in trouble. Then on top of it, there's a pension crisis. We've talked in the past about California being behind $500 billion on the pension promises they've made to their government employees. Harold, to me, and we have about 2 minutes left in our show here, to me, this is one of the big issues going forward, and that's a real reason to own hard assets. It's a debt time bomb, and eventually it is going to go off.
You bet. And the fact is that this is all, again, backing up what we're saying about the U.S. elections and, why these numbers and everything come out. It's always to make things look better than they are and to distort the numbers and to distract you from what really is the situation. So there's just no doubt that nothing has changed. Things will get a lot worse after the elections, and the fact is that we just got to be smart about them. We got to be very conservative, no speculation, don't over-leverage anything, and the fact is that if you're in the hard asset market and you diversify yourself correctly, we're not only going to get out of this doing well, we're going to make a lot of money, and then we're going to be able to take advantage of tremendously undervalued markets. You see, every market has its time. And the fact is that back in the 90s, the stock markets were strong, and then you saw what happened in 1999. The markets totally plummeted. The NASDAQ went from 5,000 down to 1,000. Stocks like Nortel dropped from $125 down to 50 cents. Then we saw it again in 2008, where the markets dropped 50% or more. The Dow dropped from 14,000 to 6,500, and again, everybody got wiped out. 2013 could bring the exact same situation again. We do not want to fall into that situation one more time.
Thank you very much, Harold Siegel, for your knowledge for another week.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Harold's website is rarecoloreddiamonds.com. Telephone number 1-800-432-1022. His auction website, hsfineauctions.com. We will announce the next auction on our radio program. Keep checking back with the radio show, the website. to invest in precious metals, wwpmc.com. To connect with Worldwide Precious Metals, 1-866-623-2002. Don't forget, the shows are archived on Herald's website, hesradio.com, and we have recently added a podcast feature where you can now take our radio show. It is portable. You can listen to us via your iPod, and we encourage that. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.